In today's economic storm, people's retirement accounts are being devastated. Consumers are searching for a safe place to put their money. Are you feeling the same? If you are, please get ready to listen and learn about a new concept that will give you financial security and peace of mind. Now, here is the host of Become the Banker, certified financial planner and award-winning author, Joseph Quijano.
Good morning, ladies and gentlemen, and thank you for tuning in to our Become the Banker show. And I hope you had a beautiful, beautiful Valentine's Day over the weekend. I know that here in Colorado, we've been really experiencing this whole weekend. I mean, sub-zero weather. I mean, I'm talking about it. It has been the coldest that we have had in many, many years. You know, it really got down to maybe like -9 or 10 below zero. So it's been pretty cold, and it's supposed to last a little bit longer. I guess today would be a day that's going to be actually pretty chilly as well. And then tomorrow we'll begin the warming trend, which is kind of nice. This is why I love Colorado. It doesn't really stay cold, every single day. Kind of vacillates, almost like the stock market. It goes up and down. But anyway, I want to welcome you. I have my son with me on the show today. His name is Jordan, and he's a financial advisor. And we are here to share some knowledge with you that a lot of people really have told me that this knowledge should have been taught in schools. But sadly, it is not being taught in schools. And people really learn, they need to learn how to manage their money so they can get ahead financially. And today's topic is really very appropriate. Spring is really spring cleaning. Spring is really coming around the corner. Before too long, it's going to be springtime. The flowers will begin to bloom. And then we'll have summer, and then, of course, all the seasons of the year. But spring cleaning has been a kind of a method that people use to get rid of things that they don't need, to clean up their house, clean up the clutter, and basically start a new spring. So when I was going to school to become a certified financial planner, we learned a technique, that we used to call financial spring cleaning. And you got to just figure out, we're going to give you some steps today, figure out, what is it that is really cluttering your financial space? I mean, have you actually taken the time to actually look through all your finances to make sure that you can discard the products, discard the strategies that may not be working for you? This is a time of reflection. And to me, it's one of the most beautiful times of the year because you get a chance to actually sit down, be with yourself or your loved one, and just go through your finances to make sure that you're only keeping the products and the strategies that are working. And if they're not working, don't be afraid to toss them out. You know, um, I have met people in my life that I think I'm one of them. I like to collect a lot of things, and I hate to get rid of a lot of things. And I think Jordan, I think you have made some comments about me, just keeping things that I may not need. But you
Right,
know,
right.
I mean, there's difference in people, right? I mean, we have differences of, like I collect things, and I really hate to throw things away. Now, I'm not a hoarder by any means. Okay, don't get me wrong, but I mean, I look at my office and I say to myself, oh my gosh, I have to clean this place up. But I mean, I'm saving things that I don't need. That's. I mean, does that happen to you, Jordan?
Yeah. Yeah, it definitely does. I think it's a pretty common nature, of our humanity that I think we all kind of have some kind of willingness to maybe not let go of things that we might need, whether it be, procrastination of not doing the spring cleaning you might need to do, or if it's just maybe you don't want to let go of that because it feels so important, but And the reality, you leave it in the same corner of your desk, you leave it in the same closet of your house, and then all of a sudden you see it there 2 years or 3 years later. And I think a lot of people come across this when they move. I think I've heard from plenty of people when they move, there's many, many boxes they've kept for years, and they've just transferred them from house to house to house. But at the end of the day, that box probably could have been thrown away that at the first house. It's just that emotional attachment to it keeps you from doing it. So I think that's very true when it comes to finances and debts and everything that we're going to be talking about today.
Absolutely, and about 2 years ago, and I think you also, Jordan, about 2 years ago, we moved into a new home, right? And I still have boxes in the basement.
Yep.
And I thought about it. I mean, I have like maybe, I would say probably like maybe 15 boxes in the basement that I have not opened up. Think about it. I mean, I don't even know what's in there anymore. I know I
I
have
know.
some books and all that. I don't even know what do I have in those boxes. But then I told my wife just, the other day, I said, you know what? Maybe we should just throw all those boxes away. I mean, I haven't needed anything out of those boxes for the last 2 years. I
Right.
mean, why are we hanging on to it?
I know. It's
Right?
so true.
So,
It's so true.
I mean, yeah, this is like spring cleaning. We have a good friend and a good proponent of the Become the Banker, Tom Martino. He's a minimalist. That means that he doesn't store anything, and he only uses what he needs. So I guess you have to have a balance, right? I mean, I like to collect things. I'm not a hoarder by any means, but I mean, that the emotional attachment, like my son was talking about, I kind of hate to throw things away. But I'm coming to the realization today that based on those boxes that I was just talking to you about, I haven't used anything out of those boxes for the last 2 years. So why keep it, right? Why keep it? And so it is with your financial products. Have you actually, those of you listening to us, please, have you taken the time to sit down with a piece of paper and a pen and just write everything down? Like, what is it that you have? Do you have life insurance? Okay, let's take that for just as an example. You have life insurance. Okay. When was it that you purchased a life insurance policy? Has it been maybe yesterday, a month ago, 10 years ago, or maybe even 20 years ago? Think about it. Now, just one product. We're just talking about one product, life insurance. So I think it's a very important product to have for any financial plan. But if you actually bought a life insurance policy more than 5 years ago, guess what? That life insurance policy may not be working properly anymore, because every year companies actually come out with better products. Actually, every year we are living longer. Right now, mortality tables have us living to age 121. Can you believe that? So as we're living longer, life insurance companies have to, by law, they have to reduce the premium, or the cost of insurance. So if you bought a policy many years ago, or just even several years ago, you may be overpaying for that product, for your life insurance. So I think it's very important to sit down, take a piece of paper, and if you want to, we can actually give you a booklet. If you can just give us a call at 303-779-6600, or just go to the website, becomethebanker.org, and just send me an email. And you can just send that to myself or Jordan, and we can send you a booklet, like an organizer, absolutely free, to actually put your finances in order. I think this is really important. But again, listen to me carefully. I mean, if you bought any product, any financial product, more than maybe 1 or 2 years ago, that product may be really outdated.
Yeah, and
You
I
may
agree
be
with that.
right. Yeah, I mean, you may be paying more, right, for the cost of insurance.
Well, yeah, and just I mean, with that simple product or just plan of action, I think it's more important, just like you said, to take inventory of everything, like you're mentioning. Write everything down on a list, take inventory of what you have and what you're missing. I mean, everybody should have some of the basic necessities when it comes to financial planning, just like you need the basic necessities when it comes to living. And a lot of those necessities we've talked about throughout the show with budgeting. That is a very important necessity to have, so you can revisit where you're at in the year and kind of where your goals are meeting. Another necessity, though, is also a will or a trust. I mean, this is something we see all the time when we sit down with individuals, when we meet with them. They do not have a will in place. So if you're somebody that's listening and you do not have a will, that is crucial. That is probably step number one before anything, is to get a will put down in place so that you can have the basic necessities taken care of. And then, of course, power of attorneys for children that are still at the house, or for medical power of attorney. That's a very important piece of the will. Legacy planning, just like my father mentioned with life insurance, or what would happen if you pass away. Retirement, which we're going to be talking about a little bit about too. What 401ks, IRAs, Roths, tax-free, taxable, all that kind of money that you may have and may need. And then, of course, taxes. I mean, this is the time of tax season, so you have to have your taxes in order, write-offs for individuals, for businesses, and have all that put in one place so that you can really just take an overview of everything, an over inventory of everything, and have the information ready for your CPA or tax consultant, or if you do it yourself. So this, to me, isn't just a time of cleaning out, but it's part of taking that inventory and see what's missing. What are you missing to have just a really sound financial plan, or a very good inventory of your financial products and items?
I agree. I totally agree. And like I said to you, we're going to take maybe one or two or three products and really kind of nail down what is it that you need to do to actually do the spring cleaning. Is spring cleaning for your financial planning. But talking about life insurance, most people don't really kind of don't really realize that life insurance could actually be a dual purpose policy. It doesn't have to be just a death benefit, even though I truly believe that people should have life insurance to protect their loved ones. I mean, there's no two ways about it. I truly believe that. But most people don't have the slightest idea as to how much to buy. Think about it. Okay, now we're talking about only the death benefit at this point. Most people don't even understand or know how much life insurance they should leave behind. Now, my biggest, I guess you can say, connotation of this is that life insurance, you need to calculate what is your human life value. What is your human life value? Think about that for a moment. I mean, and it's real simple. And I think we have done this in the past, Jordan. But I mean, we have actually sat down with people, or we can just tell you right now. It's a very simple formula. All you do is basically take the income that you're making right now. I don't care whether it's 20,000, 30,000, 40,000, or 100,000 plus. It doesn't matter. Every year, what is it that you're making every single year? Put it down on a sheet of paper. And then basically, just put the number of years that you have left. Take it times the number of years that you have left without retiring, that your working years left. So if you are 40 years old and you want to retire at the age of 65, well, you take that income, the annual income, times 25 years, right? And you got to come up with a number. So, for example, I mean, if you're making 100,000 a year and you got 25 years for your retirement, let me say you will be earning throughout your life. Your potential earning would be of $2.5 million. Now, if you had a machine in your basement or in your home someplace that would actually print or crank out 100,000 every single year for the next 25 years, would you insure that machine against theft, against breakdown, against fire? Of course you would. Well, that machine, ladies and gentlemen, is you. You are earning the money. It's your earning capacity. And you should have insurance to cover that earning capacity. So the more you make, the more insurance that you should have. So this is something that I like to do with my clients on the spring cleaning scenario. Look at their life insurance, make sure that it's working properly, and make sure that they have the right amount of insurance. You don't want to over-insure, but you don't want to under-insure either. So what is it that you need? Now, if you have any questions, or if you want us to kind of do a review with you of your life insurance policies or any other item that we're going to be talking about today, just go to the website. Go to the website and request a Zoom meeting or a telephone call, no matter where you are, whether you're in Canada, the United States, any place, it doesn't matter. We can help you. Okay. So we're getting close to the break. So I want to just let you know that we're going to be taking a small break, and then my son and I will come back to talk to you about the other items on your spring cleaning journey. Talk to you soon.
If what you thought to be true about money turned out not to be true, when would you like to know about it? Most of us have been taught wrong about money either by our family or friends. Our school system does not have any curriculum to teach us how money really works and how to make our money grow without risk in any economy. By tuning into Become the Banker radio show with certified financial planner Joseph Quijano, you'll learn the truth about money and strategies to help you grow your money without risk. Are you ready to thrive financially in the economy? Listen for Become the Banker radio show every Monday at 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, and 9 a.m. Pacific.
Are you a subject matter expert? Are you here to share your expertise with an audience waiting to hear from you in only the way you can deliver? Are you ready to have your voice amplified across the airwaves? Inspired Choices Network has a global radio platform streaming to millions of people across the world. Professionally produced and supported by an accomplished team every step of the way, you can broadcast from anywhere in the world, knowing your voice matters, and we ensure it is delivered with ease and efficiency. Eager to hear your message, the world awaits. Contact us today to become an Inspired Choices Network radio host. Email becomeahost@inspiredchoicesnetwork.com.
This is the Become the Banker Show with certified financial planner Joseph Quijano. To participate in today's show, join our live studio audience in our chat room at inspiredchoicesnetwork.com. You can also ask or comment by email to joseph@becomethebanker.org or text to 303-880-0887.
Hello again, ladies and gentlemen, and welcome back to the show. I'm Joseph Quijano, and my son Jordan Quijano is with us, and we're going to be talking to you today about doing spring cleaning for financial planning so you could have a phenomenal 2021. The year 2020 was a total disaster for most people, and we're looking forward to having a great 2021. We're very optimistic, so this is the right time to get rid of the stuff that you don't need. That's what we call it, spring cleaning, or to actually see the products that may not be working so you can actually change them into something that are more not only appealing to you, but maybe that will give you more effectiveness in reaching your financial dreams. So we were talking before the break about life insurance, and we mentioned briefly that if you bought a policy several years ago, you may need to have it reviewed to make sure that it's actually working, to make sure that that policy is actually giving you the best amount of insurance for your dollar bill. Because life insurance companies today are becoming more and more proficient at reducing the cost of insurance because people are living longer. So if you have an older policy, you may be overpaying. And there is a tax code called the 1035 tax-free exchange that it will allow you to exchange your life insurance policy totally tax-free. Think about it. Without any penalties, totally tax-free for a newer version, for a newer policy. See, the government knows that things get better with time. So if you have an older policy, like I said, you may be overpaying, or you may not be getting the right coverage. So give us a call. We'll be more than glad to help you. And Jordan, if you want to add anything to this before we move to the next topic, we can actually, by all means, chime in.
Yeah, no, I think from what I mentioned, as we go through these checklists that people should have, I mean, that's the key thing, is just take notes. I mean, there's, this is crucial information that, I think we all say that we're going to get to it someday, and just like we're going to get to cleaning out that box that we've been moving around for the last 2 years, so it is with financial planning. We're going to get to it. That's that mentality most people have, is that, I'll get to that, or I'll start saving for retirement, or I'll eventually, put a budget in place. This is the time to start doing it. It's now or never, because as we all know, procrastination is the easiest route. The least resistant path is usually what most people take. And so if you can just take the 5 to, probably, let's say half hour, let's say 20 to 30 minutes that you need to really do to put a plan together of what you should take inventory of, what you should list as far as your debts, and just really take the time. This is going to put you in such a better financial position for the life of your working years as well as retirement years. And that's so much more important. And it only is going to take you a half hour, maybe an hour tops, for the rest of your life there. And then you can always revisit it. So I love when people do Excel spreadsheets on this, because it allows you to consistently change or update it as you move forward. And that, to me, has been the most beneficial, I guess, list or best process of putting this together, is use an Excel spreadsheet, put it together. And when I meet with clients who have Excel spreadsheets all already put together on their budget, already put together on their debts, and just everything, it really helps out, because when I revisit with them 2-3 years down the road, and we try to meet every year, but let's say something changes 2 years down the road, they can just pull that list right up, and they have it ready to show me with what's changed from the last time we met. So Excel spreadsheets are your best friend, or you could use the good old fashioned way and just write it down on a piece of paper with pen. But this is something that really, half hour to an hour is all we're asking for you to dedicate to make your life easier and to get to a more successful spot financially.
That's a great idea, Jordan. I mean, that is truly a great idea, because I know I really appreciate, like when clients come in and they're so organized, they have everything written down on a spreadsheet like you're talking about. And when we get a copy of that, obviously they have a copy in their computer and they can update it. You can update it, and you can say, okay, this is spring cleaning season, so I'm going to get rid of this, I'm going to get rid of that. And you know what? This thing is not working. So you can modify the spreadsheet. So if a life insurance policy is not working, check it out. All right. So anyway, so that's one product. So if you need to have a review of your life insurance, give us a call. If you don't know, basically, if you have the right coverage, give us a call. If you are wondering, hey, do I have the right policy? Give us a call or go to the website. I'm telling you right now that I guess, how can I say this? There's so many companies. There's about close to 5,000 companies selling life insurance in the United States. Think about that. Over 5,000 companies. Now, I know that you have heard some of those big names like State Farm, for example, Allstate, Farmers Insurance. I mean, they're wonderful insurance companies, but you know what? They have everything. They have every product. So their agents are actually compensated if they sell their entire line. That they hire what they call captive agents. They can only sell for a state farm. They can only sell for farmers. They can only sell insurance that their companies have. That's what they're called, captive agents. Now, it doesn't mean that all their products are good. I mean, for example, State Farm could have a phenomenal car insurance policy. I mean, hands down, that's one of the better companies for car insurance. But what about their life insurance? Their life insurance is not as good as other companies that only specialize to sell life insurance. What about their health insurance? It's not as good. But you see, their agents are trained, they're motivated to sell the entire line. You know, something many years ago, somebody told me this, and when I was actually a little bit younger, I had a problem with my skin on my face. I was too oily, and somebody told me to go to this Nordstrom store, and they had a line of cosmetics. You know, something to wash your face with, a scrub. They have a toner, they have an eye cream, they have the entire line, right? So I went ahead and I bought the entire line. I mean, I bought everything, which by the way helped me. But later on, I found out that maybe their eye cream was not as good as another eye cream from another line. So nobody has the corner of having the right product all the time for all your needs. Think about it. So you need to pick an agent. You need to pick a financial planner that is totally unbiased, that is not motivated to sell only one company's entire line. Because if you do that, you're missing the opportunity to actually look for a better product, a product that may fit you and your situation a lot better. And those agents, by the way, are called independent agents. That means that they have maybe 25 to 50 different companies that they can actually shop around for you to give you the best products, not from any one company, but from all of them. Now, how good is that? Now, think about it. We, in our practice, we have specialized in representing not just only one company, we represent several companies. We'll be able to pick and choose the right product for our clients. Right, Jordan?
Yeah, it's very much so like a mortgage broker. You'd rather go to typically a broker because they're going to have access to more than one bank to get you the best interest rate. So it is with financial planning. You almost look at independent agents or agencies to offer the best product for that company and for that specific product, and that's a very, very important value that we bring with Become the Banker, because you hit it spot on. We don't have to only be selling State Farm or only be selling New York Life or only be selling the best product of that company and try to sell you the whole product line for that company. So you're spot on with that. But I think we're coming up on a break here. So definitely, I mean, this is something it's important to make note of, because a lot of people end up usually buying car insurance, starting with that, and then they get a call maybe 4 to 5 months down the road from the agent. It says everything's going great, but I also have life insurance. Have you ever thought about that? And what do? They end up buying life insurance from the same agent that's probably selling from the same company. And a lot of times people also buy from friends or family, and then they 5, 10 years down the road, when we meet with them, a lot of times they say, gosh, I kind of only bought that policy because I know the person. I feel good to buy it from the person, but really looking at the different products that are out there now and what you guys offer, I wish I hadn't bought that, or I wish I would have done more research. And this is something that people always bring up to us all the time. So it's okay to help family and friends out, but keep in mind, you got to take care of yourself too and buy the right product that fits for you and your family And then you can take care of friends and family by helping them out with maybe buying a smaller policy or something else. But this is something that people got to remember. You got to take care of home base first. Take care of your home before you can start giving out to the others. And that is very, very important so that it gives you the ability to give out to the others. So we're going to be jumping into a break here, and we're going to be coming right back to this topic. And again, take some notes, write down not only what we're speaking about, but where you can find out more information, which you could go to becomethebanker.org, O-R-G, or also visit our YouTube page. We give out crucial information all the time at Become the Banker, our YouTube channel, and we put out videos frequently on topics just like what we're speaking about today. So this is Jordan Quijano with Joseph Quijano on Inspired Choices Network, and we'll be right back with you after the short break.
If what you thought to be true about money turned out not to be true, when would you like to know about it? Most of us have been taught wrong about money either by our family or friends. Our school system does not have any curriculum to teach us how money really works and how to make our money grow without risk in any economy. By tuning into Become the Banker radio show with certified financial planner Joseph Quijano, you'll learn the truth about money and strategies to help you grow your money without risk. Are you ready to thrive financially in the economy? Listen for Become the Banker radio show every Monday at 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, and 9 a.m. Pacific.
Investments hit all-time lows, except for Become the Banker. Do you know how much money was lost in those accounts? Not one penny. Become the Banker is a safe, guaranteed return of 4% plus a 1% dividend. In a nutshell, you overfund life insurance on purpose to build a tax-sheltered cash account for retirement and for loaning to yourself along the way and not losing to the stock market. BecomeTheBanker.org. You owe it to yourself to go to the next seminar. BecomeTheBanker.org. Who's laughing now?
This is the Become the Banker show with certified financial planner Joseph Quijano. To participate in today's show, join our live studio audience in our chat room at InspiredChoicesNetwork.com. You can also ask or comment by email to joseph@becomethebanker.org or text to 303-880-0887.
Well, welcome back, ladies and gentlemen. And hey, Jordan, you may want to, if you want to, start with maybe some retirement products that maybe people that are hearing the radio show today can actually do their spring cleaning with, and see how we can be able to help them clear the clutter of their financial status.
Yeah, I think with any steps that people need to do in today's world is, you got to be able to just take the necessary time to really get the planning in action. Just like we've been talking about the show, just spend that half hour to 45 minutes to an hour to really put your plan together. And like I mentioned earlier, I think the key thing is writing down just different areas, like we talked about. Focus on banking, one area, which would be credit cards, your bank accounts, any debts, mortgages, vehicle loans, student loans, and make sure that you have all your, auto pay or e-statements kind of put down with that list as well. So you know when that statement is due, and a lot of times people need to be putting minimum payments, interest rates, actual payments, all of that to be able to have a great idea of what that's going to look like going forward. That's one area. The second area is taxes, which right now is very, very crucial because it's tax season. This is the time that you're starting to get those statements, or you already have received the statements from your employer. And this is where you need to start being able to put this information down and have a good idea of what your taxes are going to look like. Are you going to be owing more money? Are you going to be paying less? Did you put enough money away throughout the year by selecting your right deductions? And this is important, especially with the new administration. We're always fearful that taxes may increase, and more than likely they're going to increase this upcoming year. Probably not 2021, but probably 2022. You will see, or you will be paying it for 2022 for the year of 2021 is what I meant to say. 2020, you won't have to worry about it because we're already in the tax season right now. But this is where it's important to have it written down so you know where you're sitting at. And if you have the appropriate amount of money set aside throughout your paychecks and the right deductions for your CPA or tax consultant to be able to take advantage of for you. Especially if children are moving out of the house, if your dependents are not there anymore, they're going to college, they're going, you have different tax write-offs, they move completely out. This is important to keep this updated because it's always changing, ever so much with not only the administration, but with our personal lives as well. Budget, of course, is right behind that. And we've talked about that numerous times. Definitely check back to one of our previous episodes to really dig deeper into how you should build a good budget. What are the appropriate ways of putting a budget together? But that is important to have your income, your expenses, and then of course your debts listed within that, how much your payments are going to it. That way you can really put your goals onto paper and how to hit those goals with your budget. Fourth is retirement planning, which we've touched a little bit on, but this is something 401ks, IRAs, Roths, if you have brokerage accounts, if you have old 401ks from previous employers, anything of that sort, you want to have it listed somewhere so that you can be able to get the information in one area and always have it updated so that when you do go to a financial planner like ourselves, we can see that and help you put it all into one area or move it appropriately so you don't lose any money and make it grow and work for you the best we possibly can. So retirement planning is really important since most people either procrastinate on retirement planning and they wait until it's the last 5 to 10, 15 years before they retire to really start doing it. But we always encourage you, if you can start sooner, the better. It's going to give you the ability to not have to work all the way to 70 or 65. If you really want to retire at a reasonable age, all it takes is the discipline to put your goals in place and really sit down and put your retirement plan together. That's all it takes. The people that are typically having to work the rest of their life or into the late 70s are people who procrastinate this and they don't want to look at it. They don't give it the time of day until it's too late or until they're in those working year or end of working year window. So retirement planning, I'm not going to echo it too much, but just hit it now, get it going, get your foot in the right direction, because every year you wait is a year lost of making money grow for you. And the fifth
Yeah, that's it.
and
Go ahead.
final is legacy planning. And that's something we just touched on a little bit. But again, wills, power of attorney, life insurance, anything that we call like your exit strategy for when you pass away and leave on, is everything set up so that you have the appropriate documents so that if you pass away, all your money and information goes to your spouse. And I'm not talking about just having it written with the companies and them having the correct beneficiaries listed. I'm also saying that you need to have this information readily accessible for your significant other or for your children. A lot of times, people might have their appropriate beneficiaries listed on accounts, but that beneficiary, whether it's the child, whether it's the spouse, doesn't even know that that account exists unless you tell them about it or unless they have an area to look for this information. So having all this information accessible for if something were to happen, that is so much more important because it's already stressful enough to deal with the passing of a loved one. So having it listed that this money goes to this person or that it's in this area to find and contact this company or this agent just makes it that much easier, and it makes you really set your family and loved ones up for success, especially through a tough time like that. So consider all those areas, really sit down, put it pen to paper, Excel spreadsheet, whatever you prefer, but have it accessible, have it ready, and be able to update it on the ongoing, because this is your lifeline. This is your financial lifeline that'll help you be successful. So there you go, Joe. Take it away.
Yeah, no, that's very good. No, that's really good. I mean, and also, what I want to talk to you about is, I know Jordan touched about the different topics on to do your spring cleaning with, and one of them is, like taxes. You mentioned taxes and retirement planning and all that, which is so true. I think a lot of people, I don't really think that they really know what they have. I mean, at least the people that we meet with or we talk to on a daily basis, they're really kind of clueless. And it's sad to see that because they haven't looked at their plans for such a long time. That's why spring cleaning is so important. Not only manually to do the work, but also just to sit down and do some reflection. Like, for example, I think most people have a retirement plan at work. They either have a 401k or they have any other qualified plan. Okay, but I mean, do they really know what are they investing in? You know, we talked about this before, Jordan. You know that we call it the water cooler effect, because when people go to work for a company, you know, they're handed a packet and they say, okay, you got to check all these boxes and choose the investments you want on your 401k. I mean, how do they choose investments? They're not financial planners. They're common everyday people. They have no idea, none whatsoever, what to choose. So they go to somebody within that company and they ask that person, hey, what did you choose for the 401k? You know, and they just copy the same things without having a clue of what they're getting into. Now, when the market crashes, they have nobody else to blame but themselves because they did no research. They never sat down with a financial advisor to actually guide them through their tolerance. I mean, are they aggressive or are they conservative? And choose the proper investments on their 401k. So spring cleaning to me is really very important because maybe the 401k that you have right now or your retirement plan at work may not be working properly anymore, just like the life insurance that we were talking about. So maybe it's time to spring clean those retirement plans. You see, right now, companies here, at least in the United States, I would say that over 90% of the companies, even though you're working for that company, they will allow you to transfer some of that money that you have in their qualified retirement accounts to another company with no penalties at all. Think about that. It's what they call in-service transfers. Now, not all companies do that, but I would say a good majority, like 90%, will allow their employees to actually take part of their money from their retirement accounts at work and transfer those monies into another account and their own individual, independent account. And the reason being is that maybe the 401k, for example, is not working anymore. Maybe you finally realize that the investments that you chose in the 401k after the market went down a couple of times and you lost some money, that you're not an aggressive investor, that you're more conservative. So you don't want to lose any more money. So it is for that reason that you can actually ask your employer, hey, can I do an in-service transfer? And if they will allow you to do that, give us a call, because we can take your money that you have right now at risk and place it into our plan, which we call the guaranteed pension account, that will guarantee you that you will not lose a penny. Think about it. So if you're concerned about losing your money, your retirement money, ask your employer if they will allow you to do an in-service transfer. If they say yes, give us a call or go to our website and we can transfer that money into the guaranteed pension account that will guarantee you that you will never, never lose one penny. In addition, they also, by doing that transfer, they will give you a gift. That company that actually receives your transfer, they will give you a bonus. And the bonus percentage will range, where it ranges by state, but in most cases, it's about 9%. 9%. So if you transferred 100,000, they will give you 9% immediately. Day one, they will add it to your account. This is to make up for any losses that you could have suffered in the stock market. Now, we're getting ready to go to break here again, but this is really exciting for me to share with you. So keep listening because we're going to be talking to you a little bit more about the guaranteed retirement pension account and how it can spring clean your retirement plans that you may have right now. So stay tuned, and Jordan and I will be back in just a few seconds, okay? Take care.
If what you thought to be true about money turned out not to be true, when would you like to know about it? Most of us have been taught wrong about money either by our family or friends. Our school system does not have any curriculum to teach us how money really works and how to make our money grow without risk in any economy. By tuning into Become the Banker radio show with certified financial planner Joseph Quijano, you'll learn the truth about money and strategies to help you grow your money without risk. Are you ready to thrive financially in the economy? Listen for Become the Banker radio show every Monday at 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, and 9 a.m. Pacific.
Hello, I'm consumer advocate Tom Martino. For years, I've been telling you about a safe, secure investment that you can do for as little as $200 a month. Earnings grow tax-free. And better than that, during this recent stock market crash, they did not lose a penny. Even though investments hit all-time lows, those involved in Become the Banker are still earning their guaranteed return of 4% tax-free plus a 1% dividend. Isn't it time you at least investigate and possibly become the banker yourself? In a nutshell, you overfund life insurance on purpose to build tax-sheltered cash for retirement and for loaning to yourself for life's needs and pleasures, college, credit card debt, a mortgage. They can all be paid when you become the banker. Do yourself a favor. At least find out more. BecomeTheBanker.org. For the next webinar, that's BecomeTheBanker.org. And for a video review, BecomeTheBanker.info. It's time to take action and stop your losses. BecomeTheBanker.org.
This is the Become the Banker Show with certified financial planner Joseph Quijano. To participate in today's show, join our live studio audience in our chat room at inspiredchoicesnetwork.com. You can also ask or comment by email to joseph@becomethebanker.org or text to 303-880-0887.
Hello there. We're back again. This is Joseph Quijano with my son Jordan, and we're going to be quickly talking to you a little bit more about the guaranteed retirement or the pension account that we have, okay? And this is a way for you to move some of your ineffective retirement products into this guaranteed account that we have that will guarantee you that you will never lose a penny. That's number one, safety. When the stock market increases, you will get a percentage of that growth. But when the stock market crashes, you are not going to lose a penny. And on top of that, you're going to get a bonus to transfer your money. So go to your HR department and find out if they will allow you to do what they call an in-service transfer to an individual account. And then we can help you. Give us a call. Now, the next topic that I want to cover before we actually end the show, which is very important to me, and I'm going to have Jordan explain this to you and maybe go through it with you, is debt management. Getting out of debt. Getting out of debt is part of a spring cleaning because I think we carry a lot of debt. And Jordan, you want to share with the listeners right now, how we can actually help people be totally debt-free, including their mortgage.
Yeah, I mean, I think the key thing is to know, with the idea of not only putting the debts down in a list for us to look at, but ultimately, I mean, if people have debts that they're paying minimum payments or overpayments on, we can typically show you how to pay those debts off, including your mortgage, in 9 years or less. And this is something that we see time and time again. Now, if you only have just a mortgage and nothing else, well, that's going to be a little bit harder to pay off in 9 years. But if you have other debts that you are paying on, vehicle loans, student loans, where money's just getting shuffled out in all these different areas, we can put a nice report and plan together where not only are you going to be able to pay off all the debts in a systematic way, but you're going to be able to retain most of all that lost interest, the principal that you would have given back to the bank, and just make all that money stay in your pocket, earning you interest. And that's what we really focus on and become the banker, is showing you how to self-finance or self-refinance all your debts with your policy, with your program, pay them off at your own level of comfort, and then you could keep not only the interest and the principal, but at the end of the day, your money is still working for you the entire time. So it really is just a matter of, most families, we can get them out of debt in 9 years or less. Some people might take a few more years if they have a couple mortgages, or if they have a couple, uh, you know, uh, I should say properties, those kind of mortgages. But most of the time, if you have a student loan, if you have vehicle loans, if you have credit cards, you have personal loans, and then on top of that, you have a mortgage or you don't have a mortgage, most people, we can show you how to redirect that money in an efficient manner, snowball the debt appropriately, but keep your money and keep all of it working for you. That's the big difference of you paying off your debts with your own, I guess, bank account, or with you going out there and just chipping away at it month after month, or snowballing the debt in your own manner. Well, this way you are able to at least keep all the money while you snowball the debt. And a lot of times I say that and emphasize on this because we come across where most people have maybe enough money in the bank account. Let's say they have $10,000 or $15,000 in savings, and they have a credit card that's $7,000. They could easily pay it all off right there, but a lot of times they don't take the money to pay off the credit card because they don't want to lose the $7,000. They'd rather pay month after month, chip away at it, and lose more money to interest. So I understand that, because it takes time to build that savings account. It took probably a few different years, maybe 5, 10 years, to get up to that $15,000 mark. And this is why people don't like letting it go. So by doing the become the banker strategy, you get the best of both worlds. You get to not only keep that 15,000 or 10,000 or whatever the number is in your become the banker savings account, but you get to use that, leverage it, pay off the debts, keep the interest, keep the 15,000 working for you, and it's growing at a guaranteed 4%, 5% every single year, as if you never touched it, while you're getting out of debt. I mean, it doesn't get much better than that. And so we hold seminars, we hold individual webinars and individual consultations to help explain a little bit more about that, because it's kind of a paradigm shift that you have to have in your philosophy and your mentality. And so if you're not quite understanding what I'm getting at on over the airways here, that's understandable. I mean, we've only gone over a few different times, and it's really a lot easier to sit down one-on-one and show you in person on how this could get you out of debt, instead of refinancing and losing all that interest to the bank. So I think that's the important piece. So Joe, you want to close this out here?
That is right. I mean, that is absolutely right. So basically, I believe the spring cleaning, should really take you to just forget the products only, but I mean the strategies, like getting out of debt, like Jordan was talking about. To me, achieving financial freedom means that all my retirement products are working properly, that I have the most up-to-date life insurance policy to leave behind, and a plan of action to be totally debt-free. It doesn't get any better than that. So if you have all the cylinders working properly, at the same time, in harmony, your products, your strategy, and having no debt, that'd be beautiful. So I believe that we still have to cover a little bit more than what we have, Jordan. So maybe we can carry this topic one more week. So if you tune in to our show next week, we will complete the program of financial spring cleaning, which I believe is so important to get rid of the old and replace it with products and strategies that will help you achieve your goals. Don't you agree, Jordan?
Yep, absolutely, absolutely.
Okay. Well, we got 15 seconds. I'm going to thank you for tuning in. Can't wait to share with you more knowledge next week. So have a great week. Enjoy.
Thank you for choosing to listen to Become the Banker radio show. Certified financial planner Joseph Quijano will return next Monday at 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, and 9 a.m. Pacific. Until then, remember, rich people think like rich people. Poor people think like poor people.